Imagine opening your email on an ordinary morning and finding a notification. Financing approved with 5% interest rate. In a world where average rates exceed 7%, that sounds almost impossible, but it's not. This scene, which seems like fiction, is becoming reality for those who understand the game behind financing. The truth is, big banks don't want you to know this. They profit more from your ignorance than your loyalty. And today, in this video, I'm going to show you how some investors are escaping traditional traps and securing conditions that once seemed reserved for millionaires. Get ready, because you're about to discover strategies that can literally save you hundreds of thousands of dollars in interest. And strategy number 5? Almost no one talks about it, but it's one of the most powerful for 2025. If you're tired of overpaying and want to turn the game in your favor, stick around to the end. Because besides showing you exactly how these strategies work, I'll reveal 2 new tactics that even experts are just starting to use. And take a moment to subscribe to the channel, leave a like, and turn on notifications. Because here, you'll learn how to really save and make money with real estate. Now, let's dive into what banks don't want you to find out. Everything starts with a little-known secret. Smaller banks, especially community ones, have far more flexible policies than the big players. Instead of dealing with robots and bureaucracy, at these banks you speak directly with decision-makers. They're desperate to attract new customers, so they offer lower rates to those who move their banking activity. That's right. You can get 5.5% or even lower just by agreeing to transfer your checking account, investments, or salary. That's exactly what James, an investor in Ohio, did by offering $50,000 in investments to a local bank. In return, he got a loan with a 4.99% rate. Recent FDIC data shows banks with fewer than 10 branches offer, on average, 0.5% to 1.5% lower rates. Doesn't sound like much? Multiply that over 30 years and see how massive the savings become. Now let's talk about the first major strategy, loan term. It sounds simple, but choosing a 15-year loan instead of 30-year one can reduce your interest rate by up to 1%. And that makes all the difference. Imagine a $250,000 loan. Over 15 years, the monthly payment might be $2,092, with about $126,000 paid in interest. Over 30 years at a higher rate, you'd pay around $326,000 in interest alone. The tip is clear. If the 15-year payment is no more than 25% of your monthly income, go for it. Otherwise, choose 30 years and make extra payments over time. This simple move can save you over $200,000. The second strategy is buying points. Heard of this? Here's how it works. You pay an upfront cost to reduce your interest rate. For instance, on a $400,000 loan, paying $4,000 1 point could drop your rate from 6% to 5.75%. That's a savings of $62,400 over 30 years. Is it worth it? Yes, if you plan to keep the property for at least 5 years. If you'll sell in under 3 or don't have cash on hand, it might not be worth it. It's a numbers game. Always use a break-even calculator before deciding. Now on to one of the most underestimated strategies, negotiating with the seller. Yes, you can ask them to cover some of your closing costs, including those points. In one real case, a $600,000 home buyer secured a 3% concession or $18,000. He used $6,000 to buy 1.5 points and reduce his rate. The key is knowing what to say. Phrases like, "I can close in 30 days if you cover $5,000 of my costs," or, "If you accept my $580,000 offer, I'll use part of the difference to pay your agents," are extremely effective. With this approach, you negotiate from a place of power and lower your costs without dipping into your pocket. The fifth strategy is the well-known ARM, adjustable rate mortgage. It's been dubbed the chameleon for adapting to market conditions. In the short term, it offers incredibly low rates. One investor recently locked in a 5.25% rate for 7 years. The risk? After that, it can go up. So this only works if you have a clear plan. Sell or refinance before the rate adjusts. Never use ARM if you lack emergency savings or plan to keep the property long-term. As they say, ARM is like a relationship with an end date. It can be great while it lasts, but you need a plan B. Hold on, we're not done. Here's the sixth strategy. Use the property as your primary residence, at least for a while. Loans for owner-occupied homes average 1.5% lower than investor loans. That means by declaring it as your residence, you save thousands in interest. And yes, it's legal, as long as you actually live there for a period. Many investors do a fake move-in, live there for 6 months, then rent it out. This opens the door to huge savings without breaking the rules. The seventh strategy is rarely known but super effective. Get pre-approved at multiple banks at once. Sounds obvious, but most people only apply at one and accept the first offer. When you submit several applications in a short time, usually up to 14 days, credit bureaus treat it as a single inquiry. This forces banks to compete. There have been cases where simply mentioning another offer got the manager to drop the rate by 0.25% on the spot. Use competition to your advantage. And now the eighth and final strategy. Invest in personalized financial education. Sounds generic? Here's the twist. Many banks offer special conditions to clients who demonstrate technical knowledge about financing. Some even have internal programs for frequent investors. When you show up with calculations, comparisons, and specific terms and questions, banks see you as more than a typical customer and start negotiating differently. It's like showing up to a game knowing the rules. And when you know the rules, you control the game. These 8 strategies can be used alone or combined, depending on your profile, goals, and how long you plan to keep the property. The key is to remember that the financial market is like a chess game. While most are playing checkers, you can be 3 moves ahead just by understanding the board. With interest rates fluctuating so much in 2024, there's no room for impulsive or uninformed decisions anymore. Now I want to hear from you. Which of these strategies have you tried or are planning to try? Drop a comment below, because it helps not only the channel but also others facing the same challenge. And if you're not following me on Instagram yet, search for @RealEstateTricky for more practical tips, behind-the-scenes content, and daily updates about the world of investing. And if you made it this far, I have a question. Would you like to turn this knowledge into real passive income every day without having to be in control all the time? Then listen closely. In 2025, there's a new way to automate earnings from real estate and financial products using data intelligence, passive income platforms, and a strategy that can generate between $1,000 and $3,000 per day, even while you sleep, travel, or work on another project. This isn't a miracle. It's intelligent automation. Click the link in the description to see how dozens of students are already applying this method to earn more, work less, and finally live with freedom. The future of passive income has begun, and you can be a part of it now.